Hi everybody, my name is Miro. Welcome back to the channel. How safe is your money in Canada and how safe are Canadian banks? Well, first of all, Canadian banks are some of the best banks in the world. Our financial system is very different from the US. Canadian banks are not allowed to speculate to the same extent as their US counterparts, and they are fairly highly regulated. So it is very, very unlikely that a Canadian bank or a Canadian financial institution would fail. But there are also some safeguards that the government has in place in case a Canadian bank or a financial institution did fail. So that's what we'll discuss today. There are two main safeguards that were put in place by the government of Canada. And one is specifically for cash and GICs, and the other one protects your mutual funds, your ETFs, your securities, your futures, segregated funds, and so on. So let's look at cash and GICs. Your cash deposits and GICs and your local institutions are covered by the CDID, Canada Deposit Insurance Corporation, and your deposits are covered up to $100,000 per institution. The other safeguard, which is the CIPF, Canadian Investor Protection Fund, is also in place, but not too many people are actually familiar with the coverages and how this fund would work, again, in a very, very unlikely scenario that a Canadian institution will fail. Well, the Canadian Investor Protection Fund does not protect against your losses due to market value fluctuation, but it only protects against, again, very unlikely situation when your bank or your financial institution would fail. The CIPF, Canadian Investor Protection Fund, covers cash. It also covers securities. It covers futures and segregated funds. And there are coverage limits, but oversimplifying a little bit, your non-registered accounts, margin accounts, and TFSAs would be covered up to $1 million per institution. Your RIFs or RSPs, RIFs and RSPs would be covered also up to $1 million. So that's $2 million. RESPs up to $1 million. Corporate accounts, again, up to $1 million. Business accounts up to $1 million. So in a typical family where we have husband and wife, husband will have an RSP, wife will have an RSP, and each will have a non-registered account, coverage would be $2 million per spouse. So a typical family would be covered up to $4 million in losses due to a failure of a bank or a financial institution by the Canadian Investor Protection Fund. Thanks for tuning in today. Hopefully we were able to provide some value. We'll be releasing videos on a weekly basis. Please subscribe to the channel, please like the channel, and see you next time.